What is up, YouTube? This is the Working Investor. The market has been a bloodbath today, but I had some hedges in place. I am down with certain positions, but I had some hedges that saved my buttocks. And I wanted to share with you and compare and contrast the difference between the S&P 500, the NASDAQ, gold, Bitcoin, which I guess we would call digital gold, which is correlated with Coinbase in a way, because it goes up and down with the price of Bitcoin in general, and versus doing the sandwich method, which I've discussed in other videos, where you have two opposing positions with a synthetic cover call versus a synthetic cover put, and each of them are yield max ETFs that pay out a very, very good return. So the question is, which one held out best? So let's first talk about the S&P 500. So you go into SPY, look how much SPY is down. It's down about 2.9% today. You see 2.91%. Of course, the market in general is rebounding and going back up overnight. And then, people think that they can hide in diversity, say diversify, but I've seen firsthand, I've seen in multiple cycles that no matter when the market goes down, everyone tanks. That's what the Oracle talks about, and he's 100% true. You can't hide in diversity, but you can hide in uncorrelated investments. That's what I want to talk about today. But this being in the SPY did not protect you. You still were down 2.91% today. Even the QQQ, and it's quite interesting to mention, because the SPY, you think it's 500 companies. It's not just tech, so you think it'd be a little more hedged out. But look, the NASDAQ is down just around the same percentage, about 2.9% today in the bloodbath days. So you tell me. I don't know. It seems like it didn't. It tends to be more volatile, but it didn't really protect you much in being in all these sectors for whatever reason. Let's talk about GLD. I do actually have. I've traded all these, and I do have stake in it. I have GLD in my retirement account. I am hedging. I have a leap in there, and I actually bought into GLD. I got my leap in when the price was 220, and actually now it's 222. It is down today about 1.24%, but overall, I believe it's kind of holding up strong. It's been a gold, actually, believe it or not, those the boomer commercials. It's true, it's true. Gold is a very good hedge. It may not make you rich, but it can protect you from the choppiness of the market. You know what I mean? It protects you against the inflation of the dollar. It does, it's the tried and true currency. So yes, it's down 1.24%, but that, I argue, is 1/3 of the down. I guess it just went down with the market, but it is somewhat correlated, but it's 1/3 of the magnitude, which is phenomenal. Let's talk about BTC. Now, BTC, as you saw, the NASDAQ, all the markets are rebounding right now overnight. They're already coming back to some, maybe a little mean reversion, snapback. Maybe people think it was an overreaction. So yes, but Bitcoin is now up, after hours, about 3.7%, but at some point during the day, Bitcoin was down like 7%, you know what I mean, like roughly 7%, but it is coming up. But I would say Bitcoin is very correlated with the NASDAQ in general. I don't find it being a perfect hedge, you know what I mean? In this market, with inflation, I would expect Bitcoin to hold up much better. But I don't know, maybe there's other theories behind it. You guys tell me. Let's talk about Coinbase, which basically, because I'm talking about Coinbase because I'm invested in CONY, and Coinbase is correlated, it goes up and down generally with Bitcoin. You can see Coinbase has been down 7.32% today, of course, coming up overnight. But then, look at this, 7.32% down. But if you go to CONY, you'll see it's down like about 0.75% less. It's down 6.57%. So it even CONY in itself, which is a synthetic cover call ETF by YieldMax, which paid out a crazy amount of return. It does lose a lot of NAV, is down less than CONY, so it held out a little better. But then there's something called, the sandwich method, where I'm hedging 50% allocation to FIAT and 50% to Coinbase. And you'll see here that, obviously Fiat would go up a little bit. And right now, in my positions, you'll see that I put 5,000, as I mentioned, into this, I call it the sum of, this entity of CONY FIAT, which are the sum of its parts, and I put 2,500 into each allocation, and you'll see here 2178. If you add, 2178 plus you add the fiat, which is 2785, you'll see right here that I have almost my entire 5,000 back. I'm down around $37. That is it. So what percent is that? 37 divided by 5,000 of my initial investment into this entity, multiplied by 100%. I'm only down 0.74%. So I outperformed gold. I outperformed Bitcoin. Well, now after markets, Bitcoin is up. But I've outperformed. I've hedged. This hedge has been amazing. Of course, the hedge is only based on the put strikes of the fiat. But you could see here, what I'm talking about. So you guys tell me which allocation, which strategy helped the most. Yes, gold helped somewhat. Bitcoin, not that much. I find that gold helped me better than Bitcoin. And then this CONY fiat hedge sandwich method, that seemed to have held up the most. I know that some people talk about doing QQQ, which is a triple leverage inverse ETF of the NASDAQ, which goes up if the NASDAQ goes down. I guess you could do something like SQQQ versus TQQQ, but holding these underlyings kind of just for itself is kind of a little bit weird because they don't pay out high yield dividends. I guess maybe you could run some options on them to squeeze out a little extra cash. I don't know. But I wasn't comfortable. I need to figure out a way to make income off that. Anyways, if you guys have any interesting ways that you guys are hedging, please shout it out. I would love to learn from you guys. I'll share my knowledge with you guys. How are you guys doing? I hope you guys have a wonderful week, and you guys are amazing. Staying, calm, cool, collected, and keep on smiling.